Hello and welcome to the Global View, the show where we look at ways for investors to make money beyond the ASX listed universe. I'm your host, Juliette Sarli. Let's get you caught up on the big news of the day. Of course, Federal Reserve Chair Jerome Powell flagging an imminent start to interest rate cuts, saying further cooling in the US job market would be unwelcome. In a highly anticipated speech to the Kansas City Fed's annual economic conference in Jackson Hole, Wyoming, Powell also expressed confidence that inflation is within reach of the central bank's 2% target. The pivot from fighting inflation to defending against job losses comes just as the US presidential election nears. US share markets rallied on Friday after the dovish comments from Jerome Powell, and we saw the SIBO VIX fall by almost 10%. The Mag 7 gauge of mega caps rose 1.7%, Nvidia and Tesla both up more than 4.5%, and shares in human resources software firm Workday rose more than 12% after it announced a $1 billion share buyback and beat quarterly expectations with its earnings. In US economic data, new home sales jumped 10.6% in July to the highest level since May 2023. US government bond yields sank after Jerome Powell delivered his strongest signal yet that interest rates are coming down, likely at the next policy meeting in September. And currencies were stronger against the US dollar in European and US trade, but we are seeing some more strength come through into the greenback in early Asian trade. Let's get more with Lachlan Hughes from Swell Asset Management, who joins me now. Lachlan, finally we are getting this timeline, and it is likely that we'll see the cuts from September.
That's right. Excuse me. That's right, Juliette. I guess it's what we've all been waiting for some time, and we're finally getting the pivot that we've been expecting. We heard that from Jerome Powell on Friday night, and it's been interesting. I mean, we've had rates move up from near 0% to over 5% today, and over this period, the economy has been remarkably resilient. So kind of surprising to some extent, but eventually higher interest rates will slow the economy down. And I guess, what does this all mean for investors? As you mentioned, investors are now beginning to look for interest rate sensitive companies and interest rate sensitive sectors. And the biggest one of those is housing. And if we look over the last couple of years in the US, generally you have about 6 million homes transact each year. We had 4 million homes transact in 2023, and we're on track for another 4 million homes to transact this year in 2024. So over the last 2 years, there's 4 million transactions, or 4 million of demand, which will be added to the outer years, sort of being transferred from the last few years into the future. And this really bodes well for the housing-related companies. And the one we'd call out is definitely Zillow, which is like the realestate.com of the US. Zillow will do very well with higher revenues and profits as they have more home transactions come through. So I think that's very well positioned and one we like. The other one we'd call out is a business called Intercontinental Exchange, and they're probably best known for owning the New York Stock Exchange, but they also own a number of clearing houses globally. And look, they've done particularly well. They provide facilitation of trading for commodities and interest rates. They've done very well creating new products in oil and gas markets. And we obviously like it for this part, but the lesser known part of the business is their mortgage technology business. And they've made a number of acquisitions over the last 3 years, culminating in the acquisition of a business called Black Knight in the early parts of 2023 for just under $11 billion US. And look, this is a business that will do very well as rates come down. As rates start to normalize, we'll see a pickup in mortgage origination, which we haven't seen for a number of years. We're at near 30 or 40 year lows in terms of mortgage origination, and that's been driven by housing affordability and higher interest rates. So look, it's a good opportunity to look at these types of companies, and we're having validation for businesses like Intercontinental Exchange. They recently signed a large agreement with JP Morgan, obviously one of the world's largest banks, and they're going to use Intercontinental Exchange's mortgage technology. So this is kind of validation for what they're doing, and they've signed up a number of smaller clients on the back of that. But those two companies, basically Zillow and Intercontinental Exchange, both have very good exposure to housing, and that's how we're kind of positioning the portfolio for the coming years, and we expect to see a pickup as interest rates come down. Now, it's hard to say how quickly they're going to come back down. The Fed meets 3 more times this year. So potential for, if we had, say, a 25 basis point reduction in each of the next 3 meetings, that would be 0.75%. But as Powell said on Friday night, he said, look, we're going to be data driven. So although the pivot's upon us, we just don't know how quickly rates are going to come back down. But if you're thinking about the longer term, like we are, we think housing's a good place to put your money.
Okay, so housing a good place to put your money. You talked about Zillow, you talked about ICE as well. Let's talk though about the big Mag 7. NVIDIA is going to be reporting later in the week. This has really been the main driver of the big tech rally. We saw Tesla and NVIDIA up 4.5% on Friday. Can this kind of momentum be sustained? What are you looking at in that space?
Well, I think the momentum's definitely going to be there. We've seen, if we look at the cloud companies, we look at Microsoft or Amazon or Google, the cloud is growing very strongly. And, you know, this is basically applications migrating from on-premise to the cloud, and generative AI is accelerating this trend. So I guess the first point is we see very good underlying fundamentals for these cloud companies. And what they rely on, particularly for generative AI, they rely on the latest GPUs, and they're supplied by NVIDIA. And we've seen the CapEx expectations of these large tech companies really explode over the last 12 months. And a lot of the money they're spending will be spent on GPUs. So we expect that the demand environment for GPUs is going to be very, very good. And this bodes well for NVIDIA in the short term and also in the long term. There's no one that makes GPUs of the quality that NVIDIA does. But we've also seen investments made by these 3 big cloud companies in their own GPUs. So, you know, short term, the demand's going to be very good for NVIDIA. I think longer term, they're going to have competition from the large cloud vendors who will look to build out their own GPUs and TPUs.
All right, and I guess as well, Lachlan, I mean, a really busy week in terms of earnings for Australia as well. We're getting the likes of BHP, Coles, Wesfarmers. How do you expect that we might continue to see momentum on the local market?
Look, I think the local market's probably similar to the global market, and the impression we're getting looking globally is that the consumer's under pressure. It was certainly the case in the US. We saw, if we go to a business like Amazon, they talked about people shifting from wants to needs. Walmart talked about trading down. Target said the same. And if we look locally, I think, you know, interest rates, they've moved up a long way, and I think the consumer's coming under a lot of pressure. So I'd imagine that locally, the consumer's going to be more thoughtful. I think those companies that are less discretionary will do better than the ones that are more discretionary. And I think it's not a bad time to have a substantial amount of cash in the portfolio. I know for us personally, we're sitting with nearly 25% in cash at the moment, and that's really just for a lack of opportunity. But we like the setup going forward, and I think, you know, as things get tougher around the world, including locally, there's going to be good opportunities for long-term investors.
Okay, well, that's what we like to hear, long-term investor opportunities. And I guess what else is on the radar? We were looking so forward to Jackson Hole. It's happened. What's next? What's the next pulse check?
Well, look, we're always prospecting for stocks. We're finding a lot of things that are interesting, but nothing that's sort of taking our fancy at the moment. One thing we'd call out, and I guess an area we're still cautious on, is China. We've seen the consumer in China under a lot of pressure. We heard at the high end, Louis Vuitton is seeing a significant slowdown. Estee Lauder seeing a slowdown. Gucci seeing a slowdown. So I think in China, the consumer is under a lot of pressure. So we're kind of monitoring those sectors because I think there will be opportunities at the right time. I don't think that time is right now. But ultimately, you know, we're looking for companies that can continue to grow their earnings irrespective of the macro. And we talked about the cloud, but yeah, I would come back again to those 3 big cloud companies, Amazon, Microsoft, and Google. I think they're all in a very good position to continue to grow their earnings over time. Less excited about Google because they've obviously got the antitrust concerns. We've got in September, we're going to hear what's happening with a couple of their businesses. And I think Google, one that we're a little bit more cautious on, but the big two for us are definitely Amazon and Microsoft, and these companies can continue to grow both revenues and earnings in a tougher environment.
Yeah. All right, Lachlan, have a great trading day and week. Thanks so much for joining us. Lachlan Hughes there from Swell. Just before we go, let's have a look at where the local market is set to open in about 5 minutes' time. We are expecting to take that positive lead from Wall Street. Had a great chat earlier with Jonathan Takadina from MPC Markets, saying he thinks that we will hit record highs this week. All looking very bullish. But on the earnings calendar, we've heard from Bendigo and Adelaide Bank, also Kogan, NIB, Pilbara Minerals, Regal Partners, Regis Healthcare, and the petrol station operator Viva Energy. A very big week, though, as reporting season comes to a close. We're going to hear from BHP, Coles, Woodside Energy and Zip tomorrow. Later in the week, earnings from Fortescue, Woolworths, Qantas, Wesfarmers, Ramsay Health and Nine Entertainment. And the rally in US stocks faces an important test this week with earnings from the chip-making giant Nvidia. That does it for this edition of The Global View. Stick around, The Open is coming up next.